Hello, traders. Here's a trade I just got into about 15 minutes ago. Now, through my weekend scans, I had identified Etsy as a stock that had potential to have a nice bounce move. We had something called a breakout over here, which took this stock from $56 up to $71 in probably a short period of time, a couple weeks, and looks like this move up had to do with earnings. But I identified this as a level here. This $56. If price came back down to $56, there's a very good chance this will bounce again to at least $58. So I set up a limit order to go long at $56 using $53.70 as my stop loss. So I'm taking about a 1% risk of my entire capital that I have to trade on this stock. But what was interesting about this stock is that I looked at the weekly chart as well, and the weekly chart is also indicating that this should bounce from $58.65 up to at least $66.50 again. So the fact that we're already trading past that entry point allows me to take an advantageous entry on the weekly chart, and instead of going long at 58.65, I'm what I did here is I quickly checked the call options for this stock, and it showed me that a June 17th call option that expires in about 5 weeks only cost $260 per 100 shares that I want to control. So I said to myself, hey, that means that since there's a good chance this stock will get up to 66.49 again in that period of time, I'm going to take a risk and buy a call option, a $60 call option, plus the premium I paid, which means that this stock only has to get to $62.66 to break even. And the faster it does that and perhaps gets up to 66.50 in that time period means that by only investing $260 per 100 shares instead of $5,800 per 100 shares, I can tie up less money and take less of a risk, but still make the same amount of money as if I were buying the shares. And if anybody has any questions as to what I'm explaining there, you can send me a text message and I can teach you how to do this as well with call options and put options. So we'll see what transpires with Etsy in the next few days. So I'm already in this stock with a call option and I'm waiting to get filled if it trades down to $56 in the next couple days. Maybe it'll do it today even, and I'll buy some shares as well. Of course, I'll use the proper stop losses in both cases, and I'm only risking again a small percentage of all my capital that I have to trade. And just some of the other trades I'm still in. Schlumberger is doing what I thought it would do at this level when I bought last week. It's almost at my first target here of $55.82. And I'll take some of my profits there and move my stop to break even on the rest of my position. And this other stock, CVE, also did what I thought it was going to do right here. And I'm still in this with shares, and I might take off the rest of my shares at the next swing high inflection point, because that's showing me that there's a lot of sellers there and it has a chance to to stop going up there and come back down. I can always get back in if it continues to trend up. And by the way, the reason I wanted to get into this Etsy trade today is because the weekly time frame charts have less noise than the smaller time frame charts. Like, I don't know this is going to get to $56, and if it doesn't and turns around here and starts moving up, because of the weekly supply demand picture where there's a concentration of buyers at this point, I don't want to miss the profits I could make on this trade. So that's why I wanted to get a starter position, tying up less money with call options over here. And if it does fill me on the shares as well, that's just a bonus, especially if the trade works out in the end.